All right, so today we're going to take a deep dive into something pretty interesting that's been happening in the financial world. We've got reports that Japan, a country that's, historically been a big buyer of U.S. debt, is shifting its strategy.
Hmm.
Yeah, and starting to favor Chinese bonds. It's almost like watching this financial tug of war between the U.S. and China and the battleground, the
Yeah.
bond market,
Yeah. It's definitely a fascinating development. It really speaks to the shifting dynamics that we're seeing in the global economy right now.
for sure. And the sources we've got for this deep dive, they paint a pretty vivid picture of the challenges the U.S. economy is facing.
Yeah.
One source actually goes as far as to call this the biggest economic challenge in history.
Wow.
Yeah, we've got wars, the push to bring manufacturing back to the U.S., and this intense competition with China,
Right.
all of which are just putting this huge strain on U.S. finances.
Absolutely. And it seems like these external pressures are coinciding with some pretty significant internal challenges as well. The source mentions potential inefficiencies in Social Security spending, even hinting at billions of dollars being paid to beneficiaries who are impossibly old.
Like, how old are we talking?
It's like 150 or even 360 years old.
Wow.
Yeah, it raises some serious questions about how those funds are being managed.
That's a detail that really jumps out at you when you read that.
For sure.
But getting back to the bond market for a sec,
Yeah.
it seems like there's this growing sense of skepticism among global investors about the U.S.'s ability to keep inflation under control.
Right.
They're just not buying the Federal Reserve's projections anymore.
That's right. And this skepticism is starting to manifest in bond yields.
Okay.
You can almost think of bond yields like a thermometer for investor confidence.
Mm-mm.
When inflation is high, the value of a bond's fixed return gets eroded.
Oh, okay.
So investors demand higher yields to compensate for that risk.
Right.
And the source mentions that U.S. consumer inflation is expected to climb by 3.5% over the next 5 to 10 years, the highest it's been since 1995.
Wow.
Yeah, that's a big red flag for bond investors.
Yeah.
And it pushes those yields up.
Which makes U.S. bonds less attractive.
Exactly. And that brings us back to Japan's interesting move.
Okay.
They're seeing these warning signs in the U.S., and they're deciding to put their money into Chinese bonds denominated in yuan.
Oh.
It's a signal that they might be more confident in China's stability right now.
So instead of chasing potentially higher returns in a volatile U.S. market,
Yeah.
it's almost like they're prioritizing safety and stability.
That's a great way to put it. And the numbers really underscore this shift. Japanese investors have increased their holdings of Chinese bonds by over 53%,
Okay.
which is more than 3 times their increase in U.S. bond holdings.
Wow. So what are investors seeing in China's bond market that they're maybe not seeing in the U.S.? What's driving this increased interest?
Well, there are a couple of factors at play. First, Chinese bonds currently offer lower yields. Now, that might seem counterintuitive,
Yeah.
but it actually reflects a perception of lower risk.
Oh, okay.
Investors are essentially saying, we're willing to accept a smaller return because we believe Chinese bonds are more stable.
It's not just about the size of the return, it's about the perceived safety of the investment.
Precisely. And the second factor is the relative stability of the yuan. Despite global economic headwinds, China has managed to keep its currency relatively stable.
Yeah.
This is partly due to their efforts to manage the yuan and partly due to their strategic focus on boosting domestic consumption.
Yeah, the source actually mentioned some interesting tactics China is using to encourage spending within its own borders. For example, they're offering subsidies to people who trade in old cars for new electric vehicles.
Yeah.
It seems like they're really trying to cultivate a more self-sufficient economy.
Absolutely. They're trying to shift away from that reliance on exports and create a more robust internal market. And we're seeing this play out not just in the bond market, but also in other areas like gold. Chinese savers are pouring money into gold, which is a classic safe haven asset. This increased demand is one of the factors driving the current gold bull market.
So let's bring this back to the U.S. Treasury for a second.
Okay.
They're in a tough spot.
Yeah.
They need to borrow trillions of dollars to cover the budget deficit and refinance existing debt.
Right.
But with bond yields rising, borrowing becomes more expensive.
Right.
And that could potentially trigger a collapse in the U.S. economy.
It's a delicate balancing act, and the source really highlights the dilemma facing U.S. Treasury Secretary Scott Bessent. He needs to raise capital, but he's hesitant to issue long-term bonds because demand is weak. He's caught between a rock and a hard place. And it's worth noting Bessent's perspective on China. He seems to believe that China's focus on exports is actually making things harder for the U.S. economy.
He certainly didn't hold back in the source
Yeah,
material,
we didn't.
calling China the most unbalanced economy in the history of the world is quite a statement.
It is. It really highlights the tension surrounding China's economic policies.
For sure.
Besson argues that instead of trying to export their way out of a severe recession depression,
Right.
China should be focusing on rebalancing its economy internally.
Okay, so we've been talking about bonds and yields and China's economic strategy.
Yeah,
But what does all this mean for the average person out there?
right.
Why should someone who's not a Wall Street investor care about any of this?
Well, it all comes back to the strength of the U.S. dollar.
Oh,
For decades, the dollar has been the world's reserve currency. It's like, the universal adapter that allows different devices to plug into the power grid.
Right.
The dollar plays a similar role in global trade and finance.
Hmm.
It makes transactions smoother and more predictable. This gives the U.S. a lot of influence, but it's a status that's facing increasing challenges these days.
And a big part of that challenge is coming from China, right?
Exactly. As China's economy grows and its financial markets mature,
Yeah.
the yuan is starting to look like a viable alternative to the dollar
Hmm.
for some countries. This shift in bond buying is just one indicator, but it's a significant one.
Yeah.
If this trend continues,
Right.
what could that mean for the U.S.?
Well, if investors continue to lose confidence in U.S. debt,
Yeah,
it'll become more and more expensive for the U.S. government to borrow money.
exactly.
And that could lead to higher interest rates on everything from mortgages to credit cards.
Precisely. Businesses might find it harder to invest and expand,
Yeah.
and consumers may pull back on spending.
Right.
Ultimately, this could lead to slower economic growth,
Hmm.
or even a recession. And on a global scale, a weaker dollar could create instability in international markets.
Right.
The dollar's dominance has provided a certain level of predictability.
Yeah.
Moving away from that could lead to more volatility and uncertainty.
It almost sounds like the U.S. is at a crossroads.
I think that's a fair assessment.
Yeah.
The decisions made by policymakers in the coming years
Right.
will have a major impact on the future of the U.S. economy and its place in the world.
This whole situation with Japan and China buying bonds,
Yeah,
it feels like a symptom of something much bigger.
right.
Like we're witnessing a shift in global power dynamics.
You're absolutely right. It reflects the growing competition between the U.S. and China for economic dominance.
We've talked a lot about the challenges that the U.S. is facing.
Yeah.
But are there any risks or downsides to China's strategy?
Of course, China's economy isn't without vulnerabilities. They're dealing with a significant amount of debt.
Right.
And their growth has been slowing down in recent years. Their political system is also very different from that of the West,
Okay.
which can make some investors hesitant.
So it's not necessarily a guaranteed win for China.
Right.
There are still uncertainties about how this will all play out.
Absolutely. The global economy is a complex, interconnected system,
Yeah.
and predicting the future is always a challenge.
It's remarkable how a seemingly dry topic like bonds can reveal so much about the state of the world
Yeah.
and the interplay between different countries.
It really underscores the point that everything is connected. Events happening in one part of the world can create ripple effects that are felt everywhere.
This deep dive has given me a lot to think about.
And that's what we aim for, to provide you with the information and context to form your own conclusions.
Yeah.
It's all about empowering you to make informed decisions.
Yeah, for sure. We've covered a lot of ground today.
Yeah, we have.
We started with the U.S.'s economic challenges,
Right.
then explored China's bond market appeal
Yeah.
and the potential implications for the global economy. We saw how Japan's move to buy Chinese bonds reflects a larger trend
Right.
and highlights the competition between the U.S. and China.
And we discussed how these global shifts could potentially impact you, from interest rates on loans to the prices you pay for goods and services.
Yeah, it really is. It's a complex and constantly evolving landscape. It makes you realize that staying informed and engaged is more important than ever.
Absolutely. The more we understand these global dynamics, the better equipped we are to navigate these changes and make informed decisions.
So before we wrap up this deep dive, I'd like to get your final thoughts.
Yeah.
What's the one key takeaway you want our listener to walk away with?
I think the most important takeaway is that we're in a period of unprecedented economic change. The old rules don't necessarily apply anymore,
Right.
and we're seeing a real shift in the balance of power.
Yeah,
It's crucial to understand these trends and be prepared for the unexpected.
that's a great point. And for our listener out there, I encourage you to keep exploring this topic. Do your own research and think critically about the information that you encounter. Don't be afraid to challenge assumptions.
Here's a final thought to consider as you go about your week. What does all this mean for the future of the US dollar? Will it maintain its position as the world's leading reserve currency? Or will we see a more multipolar system emerge with the yuan playing a larger role?
That's a question that I don't think anyone has a definitive answer to right now, but it's definitely something we should all be thinking about.
The future of the global economy is being shaped right now, and we all have a role to play in understanding and navigating these changes.
Well, thank you for guiding us through this complex and fascinating topic. I feel like I've learned a great deal today.
It's always a pleasure to dive deep with you. Until next time.